Okay, hello and good morning, everyone. Welcome to Easy Markets Daily Picture International with me, Darius Anucauskas. Today's the 1st of February, 2024. So, yeah, welcome, everyone. Welcome to the second month of this year. Sorry for the slight delay because it's a new month. We're trying here something new. So, yes, thank you very much for your patience. Like I said, there are a few technical things that we are trying out, so in order to kind of improve the quality of this webinar. But yeah, I thank you very much for being patient. But yeah, look, before we jump into the charts and all that stuff, as always, just a quick a risk warning, risk disclosure. So, yep, let me just see what I can do here. So there, okay, wait. Just a sec. Right, okay, guys, I mean, sorry, apologies for this because, like I said, the risk disclosure thing cannot be shown for some reason here somewhere. I'm trying to figure that out still. Okay. So. Uh-huh. Right. There we go. There we go. That's the one. That's the one that I was looking for. Right. Okay, guys. Apologies for this. So yes, as I said, well, I didn't say it yet, but thank you for being patient. Like I said, we're trying something new right now here from our side. So I do apologize for the little messiness, but hey, that's how it goes normally. So yeah, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest. I'll disappear from that little left corner in there, and I'll be right back. Okay. Sorry, guys. No sound. Thank you very much, FX George or Jorge or George. I mean, please correct me on this one. Is it Jorge or is it George or But anyway, so yes, apologies for this, guys. I mean, like I said, still trying out a few things. Thank you. So yes, like I said, just a quick mentioning of our Easy Markets website, which you can always check out for more information about us. And of course, just to let you know that we became the best forex broker on TradingView. So yes, I mean this has been we were honored to receive that award from TradingView, Broker Awards. So yes, this award really kind of reflects the strength and dedication of our community of our trading champions. So it's kind of you, the traders, actually, who make our platform stand out. So as a heartfelt, thank you to you for trusting us with your trading journey, guys. So, but yeah, thank you very much for sticking around. Right, guys. Okay, as I said already, that this session here it's a little bit new because we're trying out something new here. Again, please be patient with us. So hopefully all works nice and smooth. But yeah, look. Also, yeah, I mentioned the website. Let's jump into the charts. You know what? Let's straight away jump into the charts. The first one I want to pick up here on, and let me just put this like this. Yep, the first one I want to pick up here is Nikkei 225. So yesterday we saw a rally, right? Look, I talked about this index yesterday, and I said to you that if we do pop and stay above the 36,278 territory right here, then yes, my next target is the 36,425. And if that gets clear, then yes, I'll get even more comfortable with some higher levels. Well, we got a move. We got that first breakout, but then we didn't get the second one. So yesterday, as you know, the stock market went down at the end of the day after the Fed decision. And I'll get to the Fed, of course. I'll get to the Fed. But when I'll jump into the U.S. indices. Now, so yes, from the technical perspective now, Nikkei drifted lower, however, still remains above this 35,700 territory. If that gets cleared, wonderful. I'll go for some lower levels. Why? Because the forthcoming lower low will be confirmed. For the upside, the same story remains valid, 36,425. That's what we need in order to go higher. ASX 200, boom, there we go. Fantastic move to the downside. I mean, everything is as expected. Just to double check. I mean, we did get some, I think, a few pieces of data. Yeah, import price index improved a little bit, but I think that really didn't matter at all. Okay. Australian Judo Bank, Australia Manufacturing PMI came out. And that's what's interesting is that, okay, the forecast was at 50.3. It came out at 50.1, just slightly above like that, level of getting into contraction. It kind of remained in expansion territory. Still better, I mean, much better than the previous number, because the previous number was in contraction and it was at 47.6. So in a way, yes, I would say some good positive data. However, nothing matters. We can all that, kind of scrap that. Everything, it was about the Fed yesterday and today, I think. So yes, today, this is the candle today. This morning, we saw this huge decline. However, we remained above the my territory, this highlighted zone between the 7,520 and 30 levels. So if we clear that territory, then yes, great, wonderful. I will go for some lower levels. And if that happens, great, wonderful. Yes, I mean, more sellers here could join in. For the upside, yep, the same story. The 7,622 territory is required. A break of that area is required in order to go higher. Something that I forgot to put in the chat room. Good morning, everyone. Good morning, everyone, guys. I mean, I hope you're all having a wonderful start of the first trading day of the February. Well, not the first day of this week, but that'll do. But yeah, guys. And another thing, let me know if you have any questions or something like that, or you want to ask something, just out of curiosity. I mean, I'll try to answer. If I know the answer, I'll answer that. If I don't know the answer, I'm not going to answer that, obviously. Yeah, guys. Let me know. And also let me know what you think about this kind of newish layout that we have here. Look, I mean, it's a little something different. I mean, I really hope you're gonna remain like open-minded and everything, but yeah, just let me know, and I don't know, like let me know what you think. China 50 drifting. Well, this one's amazing because this one is still well, after it drifted lower, it remained above that 11,000 mark. Look, in general, China is closed, so China is closed this whole week, and if I'm not mistaken, it seems like, yes, it's not moving anywhere. This morning we got the Tizen manufacturing PMI, so that came out as expected at 50.8, and yes, I think that China will remain closed. Kind of, well, it's not really doing anything, so it's not really moving. So yeah, although I don't know why it's not moving. Yeah. Anyway, so yeah, either way, guys, doesn't matter. For me, the most important is the fact that we still remain above that 11,000 mark, and as long as we stay above that territory, then yep, the bulls still have a chance to jump in at some point, do something here. But if they eventually struggle to do anything, if they struggle to kind of remain above this hurdle, above that 11,000 mark, well, the bears can take control, and I think that they will be more than happy to do so. And yes, we could see a nice little move here further south, maybe towards that 10,640 zone, and then we'll just kind of go from there. Let's jump into the Dow Jones Industrial Average. Look at this fantastic move yesterday. Moved nicely to the upside, created a new all-time high during the day, and then there we go, boom, fantastic move lower. This is something that that we were kind of expecting. Look, let me sum up what's happening, or what happened basically yesterday. So the Fed came out, right? The interest rates, yeah, well, we kind of forgot about that already, like about the interest rate decisions and all that stuff, because it's the same. Nothing changes, right? Nothing, everything remained the same. 5.5. Okay. But everybody was then looking forward to the press conference, because everybody was like hoping to see what's going to happen there, how he's going to talk, what he's going to say. And in general, nothing much that, oh, we will remain data dependent. Wow, tell me something new, right? But the thing is that he said that they're not going to go for, and where is that? Let me exit the screen a little bit. They're not going to go for a hike, or most likely they're going to keep the rate the same during the March meeting. So basically, what they kept on saying, was like I said, this was a good thing. This is what I keep on saying, and I kept on saying that the whole idea of the 3 rate cuts, it was just for like to have a tool in order to control the stock market. So before, when they said we're expecting 3 rate cuts before New Year, they said that in December. I mean, the stock market rallied and beautifully moved to the upside, and yes, we had a nice push higher, as you saw. Yep. Then basically, the talks started about the fact that maybe there's not going to be 3 rates, maybe there's going to be 2. And actually, this is quite normal, because if the stock market continues to rally, you need to kind of, let's say, raise rates in order to control the stock market. However, they don't want to do that. They don't want to raise rates because inflation is kind of going down. So there's no point in raising rates at the moment. So that's why they're a little bit in a pickle. And that's why they've created themselves this tool where they can just promise, say that, oh, we're going to potentially cut, or we're going to potentially not cut. And that's it. That's all you need to do. That's all you need to do. That you just say that, and that's it. And this is what we got yesterday. So basically, yesterday they said that they're not going to cut. Probably they're not going to cut in March, because they will remain data dependent. And that leaves, like, up until June, from the initial kind of expectation that there are going to be 3 rate cuts, here, and here, March, May, and June. Now they're saying there's going to be 2. That means that the Fed is not really wanting to kind of, let's say, support the economy. If we put it in simple terms, that means that, yes, there we go. We're getting that reaction, a strong reaction to the downside. We drifted lower. So everything's still okay. So in a way, what I'm expecting here is to see maybe a little bit more downside, maybe a bit more lower levels here. Let me just adjust this because this is, I don't like this. Extend lines to the right. There we go. So we could see some more downside. So as you can see here, 50% retracement is near my 38,000 mark, not far from there. And I think that could be quite a good target to aim for, especially given that there's like still, people will be in, I wouldn't say in panic mode, but in this, like, the Fed, as I wrote it there, the Fed aftermath, and everybody's still going to be, oh yeah, like a bummer. It's not going to be, there's not going to be like 3 rate cuts now. It's not going to be 2. Like, oh, like, what we're going to do? We need to sell off. And this is what they're going to do, and they're going to drift lower a little bit. Then they will realize that, oh, you know what, actually everything's fine still. Like, what are we panicking about? There still could be 2 rate cuts, right? I mean, we can adjust to that. So then they adjust, and then the stock market pushes back up again. And this is where they will, come out in March, say, no, we're not cutting this time, and maybe we're not even going to cut in May, and the stock market goes down again. So basically, long story short, look, March 20th, right? So we still have some time. So what I'm expecting here, maybe to see actually like a drift lower, a move to the downside, maybe at some point, like maybe even going further south, and then let's say before, like, I don't know, maybe in the beginning of March, we could see a push higher again. And we could see that move, to the upside, because the market would adjust, and everybody's like, hey, great, let's travel higher again, and then the Fed will have to bring the market down again. So again, something that is in my head. I don't know if it's going to be right or wrong. We'll have to see. The time will tell. But at the moment, I'm leaning towards the downside. Look, I've drawn this little Fibonacci here from the lowest, from the low of the 18th of January to the high of the 31st of January. So we did the 23.6. We're now below it. I'm aiming for the 38.2, and then I'm aiming for that 50%, which is around that psychological 38,000 mark, and then we'll just go from there. So that's going to be my game plan for now. If we somehow push back above the 23.6 and stay above that, and that's on my chart on the futures here, roughly around the 38,386 zone, something like that, then yes, I will maybe consider a bit of a move back up. S&P 500. So this one declined nicely. By the way, yesterday Dow declined, but if I'm not mistaken, Dow was not the biggest loser. I guess who was the biggest loser? Yep, NASDAQ. NASDAQ was the biggest loser, but I'll get to that one in a bit. The S&P 500 was somewhere in between, as always. As always. So yes, look, for now, it's this. For now, I am leaning towards the downside here. We fell below my little hurdle here, 4,905. I talked about this hurdle yesterday. We fell below that, so okay. I mean, for now, I would say this way, that if we are looking for some, we're looking for some lower levels, then basically there is a chance, yes, for this one still to go further south. Initially aiming for that 4,841 zone right here, and then the upside support line drawn from the low the 5th of January. And then we'll just kind of take it from there. In terms of the the upside, well, I would like to see at least a push back of the 4,905 zone right here, and then we could examine some higher levels. NASDAQ 100. This one drifted lower, fell below my 17,463 territory. Okay, that's absolutely fine. No complaints here. But yep, we still kind of we still have some room here for some more downside, and to be honest, this is what I'm going to aim for, as long as we remain below the 17,463 territory. If we can do that, great. I'll go, as I said, further south. If we somehow climb back above this 17,463 territory, then yes, I will consider maybe a bit of a move to the upside. By the way, guys, just to let you know, if you think that all the fun has ended yesterday because of the Fed, no. No, we still have a very interesting remaining week, or remaining 2 days. So, guys, today we get also some data from, well, from Europe. First of all, I think it's going to be, let me just double check. I think it's going to be Eurozone preliminary CPI numbers. So if you're trading the euro, guys, keep your eyes on that number today. Later on, like about 2 hours later, it will be the BoE's turn, but I'll get to that in a bit. I'll pick up on that information. But in terms of US data, initial jobless claims and continuous jobless claims, the usual. S&P Global US Manufacturing PMI coming out as well. And then half an hour when the US stock market opens up, we get the ISM Manufacturing PMI number. Guys, honestly, ladies and gentlemen, this week is just full of action. So yes, prepare for that. Let's say we could see some interesting activity, especially if the ISM numbers come out lower. Well, this could just support that downside on the US indices. So just keep that in mind. And of course, tomorrow we get the non-farm payroll numbers. So I'll pick up on that tomorrow in my morning video. So just kind of check us out then. But yeah, at the moment, I would say this way that for now. For now, we should kind of examine the downside scenario in this one. Sorry, it went blank here a little bit. So yes, but I have nothing else to add. I think I'm just starting to repeat myself. So basically, let's leave it here. For now, my downside scenario here is still playing out. My upside scenario, well, it's not there. I need to see this one on NASDAQ drifting at least back above the 17,463 territory. The German index, DAX. So yes, of course, drifted nicely to the downside, and yesterday it drifted lower, tested the upper side of the falling channel, and there we go. We drifted back inside of it. So this is what I talked about yesterday, guys. I said that if we do drop lower and we stay above this territory, above this upper side of the falling channel, maybe a bit of a rebound, nice rebound here could be nice. Could be great. But if we start clearing this one, if we start clearing the upper side, then, well, prepare yourself maybe for a move lower. And this is exactly what's happening right now. So at the moment, I would say this way, even if we do retrace at some point here back up, as long as we remain below the upper side of the falling channel, yes, I will consider a larger correction to the downside. But I will be very careful because maybe it'll travel here. Maybe it will test the 50-day EMA. Maybe it won't even reach my 16,600 zone. Maybe, like I said, it will reach the 50-day EMA, and then yeah, if we can rebound from this territory, this will confirm a higher low, and maybe we could go for a higher high again. Who knows? But like I said, we'll examine that scenario as well. And yes, as I said, keep your eyes on the preliminary CPI numbers from EU today, from the Eurozone. So something to consider. Currently, the forecast is for the numbers for both headline and core to go down. And yes, if that's the case, okay, look, maybe there could be a bit of support for the stock market. Maybe we could see, like a jump back up, because this way maybe it would tell the story that the ECB should be cutting rates. However, I think they're not going to do that. So even if it comes out very low, below forecast, the preliminary, I think that ECB is not going to do anything. I think they will do only when the Fed does something, and then they will do that. So yeah. Let's see, of course. Let's see how this is going to play out. But for now, I'm leaning towards the downside. The FTSE 100. So yes, of course, we are watching carefully the FTSE 100 today. Yes, today is the day when the BoE will say to us, are they cutting rates or not? Well, to be honest, I don't think that they're going to do anything as well, unless they really want to shake up the market a little bit, which, to be honest, okay, it's fine. I'm quite happy with that. So let's see if they're gonna, like I said, if they're gonna do something, then they're gonna go away from their 5.25 current interest rate. So, but yeah, and if let's say another thing to consider here as well. This is like something that a little bit of a hint. So if you're trading, something pound related, then actually, you know what? When I'll jump into the pound, I think that will be a little bit more relevant because this piece of information, might get lost. So I'll jump into this, what I wanted to say right now, and when I'm going to jump into the pound pairs, because I think that will be a little bit more relevant. But coming back to the FTSE 100, look, I will say this way, that in order for me to go lower, a drop below all my EMAs here on the daily chart is required. If I can get that move, great. Maybe at the same time, we could get a break of this upside line as well. And to be honest, I think that could be the case. So this could play out nicely here for this upside line. Yeah, maybe we could, this all, yeah, would just, all the stars would align for the bears. Because if we dropped below a key support zone, we dropped below all the EMAs, and we broke the upside line. Great. Why not to go lower? So that's what I'm going to keep an eye on. However, until we remain above that upside line, yep, there is a chance for a rebound. However, my upside scenario, I'm taking a bit of a conservative approach, is from this 7,660 territory. The US dollar. So yes, of course, US dollar yesterday, it was drifting lower heavily. Then we got the Fed. And then they said that they're not going to do some rate cuts, and there we go. Of course, the US dollar is going to travel higher. And there we go. We're getting that breakout. We're getting that move above the 200-day EMA. So that's wonderful. That's great. My question now is, can we remain above that 200-day EMA? Now, the fact that we stayed above this, or we broke above the 200-day EMA, that's wonderful. However, can we remain above that territory? Well, I'm not going to rush into things. Why? Because I'm looking at my EMAs as well. So a while ago, I would say probably in the beginning of December, we crossed, or mid-December, we crossed, the 50 crossed the 200-day EMA to the downside. Then at the end of December, the 100 crossed. So both of these are below. So in a way, kind of indicating that there is a chance for a drift further south. Now, the only thing is what I'm not saying. I'm not saying that this is going to, let's say, reverse straight away to the downside. No, I think that there's a little bit of bullish activity here, or could be some bullish activity. We could see a push further north here. Maybe even testing the 104.26. So I'll actually stick to that game plan. The 104.26, that's what I'm going to be aiming for if we continue to trade above all my EMAs. That's it. If we somehow fall back below this, I'll take a neutral stand, because my downside scenario is from around here, from around this 102.80 zone. By the way, I wanted to ask you, actually, whoever's watching right now, and whoever's going to be watching this as a recorded session, tell me, did you, first of all, did you trade yesterday's event, yesterday's Fed, or like during the Fed or after the Fed? Did you trade? And how did it go? This is another thing. I mean, even if you lost, honestly, I rather you share this, because you should not keep that in you. I mean, you need to let it go, because even if you lost, like I said, this is something that I keep on telling people who I teach, that you need to talk about your losses as well. I mean, great, you made, if you made money, just also I want to hear, I mean, if you managed to make, actually don't tell me how much money you made, but just percentage wise, if you managed to make it, or if you lost as well, percentage wise, how much from your balance or from your equity, or yeah, well, actually the same thing, as long as there's no trades. So from your balance, yes, how much did you lose or win yesterday during the Fed meeting, and if you traded, of course, during the Fed meeting. So just let me know percentage wise, roughly. It doesn't have to be precise, roughly. So just out of curiosity, let me know that. Yes, so gold, guys, gold, beautiful jump to the upside. Yes, of course. Well, otherwise, I mean, you cannot jump downside, yeah. But beautiful move to the upside. Broke the 2038 zone. I talked about this yesterday. We broke that actually before the Fed. So and we traveled higher. We came closer to my 2058 territory, which I spoke about previously. In a way, I will take that as a good success because I talked about this and I said that if we do break and stay above this 2038 zone, I'm going to go for that 2058 zone. We came close to that territory, 2056 and a half, something like that. We tested that. I'll take that as a good result, and then we drifted back down. So now what's next? Next is this. Remove this arrow and basically wait. I will wait and I'll see if we do fall. So Hitchcock's G, I'm more long term, so I DCA into the tech dip. What did you mean by DCA? Sorry, I'm a little bit uneducated in that sense. What is DCA? Maybe this is something else. I mean, for me, like DCA comes up as more of a stock or something. Let's see if there is a stock. Yes, it is somewhere in Germany. There is a stock like that, DCA, but I'm assuming you mean something else. So just let me know. Maybe I'm, like I said, maybe not catching it. Dollar cost average. Right. Okay. Good. Look, I mean, into the tech. So you bought the tech dip. So yesterday you bought the technical tech stocks. Is that what you're saying? Let me know. Coming back to gold. At the moment, like I said, I'm going to take a pause, and I'm gonna just observe something like this. So if we do fall back below the 2038 zone, yes, correct. Okay, Hitchcock's G, correct. So you bought the technical stock, these tech companies, right? Did you buy the index, by the way? Actually, did you buy something like NASDAQ, or actually did you buy like individual stocks? I don't know, like Nvidias and your and AMDs and stuff like that. What did you do? I'm just out of really curiosity. I always like to ask people what they do, because look, I'm not gonna do the same thing probably. I'm just curious, to see how you think. I mean, because maybe I'm missing something. Maybe I'm but yeah, let me know what you did, like specifically. It's not financial advice. No, don't worry. Nobody's it's just that what you personally did. But again, everybody should understand that this is not financial advice. But anyway, coming back to this. Silver, let's jump in. By the way, back to gold a little bit. Back to gold. So look, for me, while we remain in this territory, I'm not really going to do anything. I'm just going to observe the price action, and I'm just going to keep an eye on it. If we start falling below the 2038 zone, great. I'll consider a bit of a move lower. For me to consider the upside, actually, I need to see a push above that 2058 territory, and then I'll take it from there, guys. At the moment, it's yes, it's not really doing anything. Maybe we could see this as a rising channel, something like that. So maybe but it's not a very attractive one. JD Invest, hi, happy to see you here. The volatility caused me some trouble, now in negative positions. Ooh, I hope you're gonna deal with that. By the way, just out of curiosity, if you're negative positions, I'm assuming that's multiple. So in JD Invest, tell me about one position which you are in and which is not working out properly. Let me know. I want to maybe take a look at that. Hitchcock's G, AMD, Alphabet, etc. We'll see in about 3 months if it worked, but already up 50% from November. Okay, no, good. Look, I mean, if you've bought it in November, congratulations. I mean, well done. And if you added some more, all your AMDs. Well, let me actually AMD. Okay, look, I mean, I was kind of hoping to see a bit more retracement here. Look, this is what you shouldn't do probably, but just applying technical analysis here, you can see that we've done a 23.6% retracement here on the Fibonacci here if we measure it from the end of October. So if you probably ended up like somewhere in November time, so you bought it somewhere here, congratulations. Yeah, I mean, now the question is, if we do break this again, purely from the technical perspective. 23.6, if we break this, I mean, there is a chance for a move towards that 150 zone, the psychological 150 zone. And to be honest, personally, me, I would probably like to, you know, do something with it maybe closer to this territory. But again, that's me. That's, you know, I have a different style. But anyway, you do whatever you're comfortable with. But yeah, thank you very much, Hitchcock's G, for sharing that. It's really, really nice. So, oh yeah, and JD Invest coming back. I didn't forget about that. Let me know about the trade that is not working out. Doesn't matter. Like, I mean, we all enter like bad trades. Honestly, I've entered some bad trades as well recently. So, but hey, that's how it is. You know, like, and unfortunately, you need to brush off, take your loss, and then, you know, you need to kind of, you know, try to get back on track carefully and quietly. Silver and oil. So let's have a look at silver. This is what the one I'm actually looking at right now. So, okay, you probably were buying, I'm assuming, right? I mean, so it's around here somewhere. But okay, look, yesterday I talked about this, and I said that if we do break this upside line right here, I will get a little bit more excited with the upside. Yesterday I can see that when the commodity, when gold and silver were pushing nicely to the upside here, because this fella was drifting heavily to the downside, everybody was like enjoying themselves and thinking like, oh hey, great, it's breaking here, breaking these EMAs on my chart here, and yes, maybe this could actually open the door to some higher levels. Well, this is what I sometimes say, well, not sometimes, I always say that let it settle down, especially during these crazy days like the Fed, you know. And yeah, I mean, we're seeing here a break of this upside line. To be honest, look, I'm leaning a little bit more towards the downside on this one. And again, I'm not gonna say that it's for sure it's gonna go lower. No, because there is some sort of hope here for the bulls still. The reason why I'm saying this is because, look, this steep upside line, okay, it kind of, you know, it worked for in the short run here, so it broke, we opened the door to some lower levels, and it could still go a little bit lower. But I think that what I would do here is I'm going to examine this little idea here as a possible, let me just, you know, let me just put this, remove the magnet. This area right here, I will probably consider as a nice little inverted head and shoulders pattern. So for me right now is this way, that if we somehow drift lower but start finding support around why is it like this, magnets, yep, so if we start finding support, actually, you know what, I think I need to thicken this up a little bit, because guys, in general, do you see clearly my dashed here resistance and support levels? I mean, if you can see clearly, or would actually you would prefer something like a little bit of a, you know, a thicker line or something like that? Because I see it, you know, on my side, because I don't like to overcrowd my chart with lines, and sometimes these lines are a little bit in the way, because I stop seeing the candles. That's the reason why I have them very thin. But if that's okay with you, I mean, I'll continue. But if you want me to thicken them up a little bit, then I can do that as well. But anyway, for the time being, at the moment, I'll say this, that at the moment I'm watching this little territory, this 22.69 kind of 70 zone, approximately around here. If it holds, then I'm considering this. And this could be a nice, good move here to the upside. And this, like I said, this could confirm that idea of a possible inverted head and shoulders pattern, with the left shoulder being here, the head, and this is the right shoulder. And then, yeah, we could maybe go from there. But if it starts breaking this one and starts falling actually below the 22.51 zone, I'm bearish, and I'm leaning towards this upside line. Initially towards the 21.88 zone, but then towards this upside line drawn from the low of the 9th of March of last year, of course. Oil, jumping into oil. So again, oil, I'm assuming JD Invest, you went long on this one, right? I mean, but look, I talked about this yesterday. I said that I'm not really getting very comfortable with the upside until I see that pop above the 79.29 zone right here. That's my kind of preferred scenario here, because a forthcoming higher high will be confirmed. In general, I'm a little bit on the bearish side on oil. So yeah. at the moment, look, we are falling below the 100-day EMA. We're staying below that, so there's a chance for this one to drift further south. And I'm going to stick to that idea. And yes, I will continue drifting further south on this one as long as we stay below the 100-day EMA. But then, of course, there is a problem here near the 50-day EMA, which we need to overcome. But if that gets cleared, certainly, yes, I mean, I will get a little bit more excited with further declines. Natural gas, so beautiful decline. JD Invest, your charts is fine, no problem. Sound is like always a bit soft. Sound is like always a bit soft. Ah, the sound is a bit soft. Oh, okay. I mean, okay. I mean, as long as you can hear me. At the moment, unfortunately, I have one mic, and it's a little bit maybe further away. I mean, I need to maybe push it closer to me. Yep, I have it here. But yeah, let's see if that's gonna work or not. But thank you very much for confirming. Thank you very much for confirming that the charts are fine. So natural gas, Hitchcock's sounds is okay. My side, okay, cool. Thank you guys. I don't know if we have Bashiro here in the chat room and watching, because this is what he was referring to. Yes, I mean, this is what he, is watching as well. So a natural gas. There we go. Beautiful rejection from that psychological 2 territory. Just a little bit above that. Beautiful. I mean, I talked about this, and look, my upside scenario is from around here, from around this 2.24 territory. And if we do climb back above this, yes, I will slowly target the upside, but I have to admit that then there is a problem with this upside line, this downside line. So all of them could still provide resistance. So if you're really looking for some sort of like reassurance, or at least some sort of reassurance, then a break of this downside line would be required. I know that we could be missing out on a bit of territory, but then in that case, you have to accept the fact that if it starts drifting back down and it starts falling below this territory, then yes, we could see some moves lower, because a forthcoming lower low will be confirmed. Bitcoin, let's jump into the crypto world. Yesterday, dollar, of course, stronger. And there we go. We drifted lower. So I mean, I talked about this as well. I said that I'm going to be bullish from around here, from around this 44,000 mark. For now, there is a chance for a bit of a retracement. We've retraced. We found some support near the 50-day EMA. So now my question is, can we see a further decline? Well, I would say this way, that if we do fall below this 40,500 territory, somewhere around here, from there I'm going to aim lower again. That's the 38.2% retracement on the Fibonacci, which is drawn from the lowest from the low of the lowest point of October to the highest point of January. BitcoinCash, very quickly, still to the downside. Yes, everything's fine. Everything's working out according to the plan here. Look, the lines are not loading up yet, but I think that they will load up eventually, hopefully. But yeah, I think that, yeah, my internet is slow right now. There we go. We've loaded up. Yes, so I'm still leaning towards the downside, still aiming for that 200-day EMA, and then I'll take it from there. Ethereum. Ethereum drifted lower. Yes, everything's fine. JD Invest, I think your comment just came through, so thank you for your review on silver and oil. It really helps. I'm counter trading them for now, writing it out. Look, be careful. I mean, in general, this is the problem. I mean, look, in general, I'm not saying that I'm very like bullish on the US dollar, but in the short run, I think that there's still some, more positivity, and this could affect the because if you're buying silver and if you're buying oil, then you're basically bearish on the US dollar, but at the moment the US dollar is a little bit more bullish. So yeah, be careful on that one. By the way, if anybody else has some interesting trades that they're currently sitting in, or had or made yesterday, or this is a perfect channel for you to brag. If you want to say that, hey, you know what, I just made 100% yesterday, like on the Fed, I'm awesome. Honestly, I would like to hear that out, because you're doing better than me in that case. But yeah, coming back to Ethereum. So we fell back below the 50-day EMA. Okay, I'm leaning towards the downside here. However, we are still staying above this downside line, so maybe a bit of a rebound here could be possible. So look, I'm gonna consider a move higher, if we do push above this barrier, above the current highest point of this week near the 2,392 zone, and then, yeah, we'll go from there. Litecoin, there we go. Beautiful move to the downside. Beautiful move towards this lower side of the triangle. So if we clear it, great, I'll go lower. In general, I would like to see a move lower, actually, in order to pick it up here lower, right? At lower levels. But hey, the market doesn't always do what I want it to do. So let's see if we can actually rebound right now from this lower side of the triangle, and then we will consider maybe a bit of a move back up again. AUDUSD, very quickly before I run out of time. Look, I've talked most about most of these pairs already this week, so I'm just gonna refresh everybody's memory. So yesterday I talked about this, and we fell back below this downside line. I said that if we do want to consider lower levels, then a drop below this neckline, potential neckline, which maybe this is a nice head and shoulders pattern, so left shoulder, head, right shoulder, and we need to break through the neckline. Let's see if the dollar can continue pushing higher, and if it can, then yes, drop below my 0.6525 is becoming a little bit more realistic now, because we already did that. We just failed to stay below it. So if we stay below that, then yes, I'm going to go lower. AUDJPY, fantastic move. I'm very, very happy with this one, because I said to you yesterday, if the stock market starts reversing sharply to the downside, guess what's going to happen with AUDJPY? It's going to be dropping lower, because it's a good indicator of a risk-on, risk-off environment. And yeah, there we go. We're seeing that Japanese yen buying activity. However, I don't think that's much as actually Japanese yen buying, but more like selling off riskier currencies, like risk currencies like AUD and NZD. So yeah, and this is what we're getting here. NZDJPY, speaking of the devil, the same story. We broke out, and look at this. We first tested the upper side, gave a little tease for everybody here, for all the buyers to jump in. And this is what, boom, this is what we got. Like, this is everybody. This is how everybody gets stopped out. I mean, this is something that you need to constantly consider and keep careful, because let's assume you're entering a buy here because you're thinking, great, it's breaking my trend line, right? But then you have to think that it did not settle yet. It's an impulse. Maybe the impulse will fade away, and then the bulls will fade away, and then the sellers will start kicking in, the bears, and there we go. This is what happened. That's why you have your stop loss, and you have to take a loss in case this this goes against you, because whenever it's an impulse, you have to accept the fact that you will take a loss. I get it. Sometimes it happens this way, that you buy here, it goes a little bit lower, it stops you out and then goes back up again. I get it, but that's unfortunately part of the deal. This is unfortunately part of, unless you have a very big amount of money sitting in your account, which allows you to have that room, to allow the pair to walk. In this case, it's better, to cut your losses early. And this is a good example for the bulls of this pair. CHFJPY, fantastic, moving to the downside, breaking this upside line. But again, I'm not going to rush into anything on this one. But why? Because we're breaking this. Let's see if we can stay below this at the end of the day. If we cannot, then we'll have just another false breakout, and this could actually strengthen my idea of maybe going into higher levels here. But again, my upside scenario, I'll be very, very boring. My upside scenario is from around this 171.50 level, so I'm allowing this to hold territory just to kind of see some walking, and yes, and then we'll go from there. USDJPY. So beautiful hold up here. In general, I talked about this, and I said that 146.40 zone, approximately around here, near the 50 and the 100-day EMA, could be a nice good area of support. And if we can rebound from here, wonderful. I will get a little bit more excited with the upside. Yeah, so look, if we do drop and stay below the 50 and the 100-day EMA, then yes, I will go to the downside here. USDCHF, beautiful rejection, beautiful. Look at this. I mean, I talked about this last time. I said that if we break the upside line and we drop below the 50-day EMA, I'm leaning towards the 0.8555 level. Fantastic. Fantastic, beautiful move here. Rebounded just straight away and pushed higher. Now, my question is, can we actually go higher again? Well, if DXY wants to, hey, this pair could also do the trick.
But for me, I need to see a push at least above the 0.8666 territory right here, and then we could just go from there. Until then, I'm not really going to do anything here, and I'm just going to observe the price action. GBPJPY, one of my favorite ones, which is right now becoming. Look, this continues to drift lower. Yesterday was a bit of a roller coaster ride. There was some buying activity, but then I talked about this little hurdle, this 186.17. I said that if we do drop and stay below it, I'll lean towards the 50 and then the 100-day EMA. I think my appetite should be drawn this way. So yes, my 50-day EMA is my next target. Then the 100-day EMA. That's what I'm keeping a close eye on. But that's only, like I said, in case if we do actually drop and stay below the 50-day EMA. Something tells me there is a chance of seeing something like that. And yep, if we do clear the 50-day EMA, then yes, I will go lower. I'll go towards that 100-day EMA. So at the moment, I'm just kind of maybe considering something like that. GBPUSD, again, watch your BoE today. Today is the, yes, Bank of England. And what I wanted to say, because I said I'm going to pick up on this idea on the pound. Look, today we get the interest rate decision from the Bank of England, right? The same expectation is for the 5.25 rate. That's fine. But what everybody's going to be looking at actually is the BoE MPC vote unchanged. Let's say vote hike. How many of the 9 members, how many will be in favor of the hike or a cut? Because at the moment, I mean, previously there was like 0 for a cut, 2 people were for a hike, and yes, unchanged, there were 7. Or actually, no, wait, what am I talking about? No, that's the forecast. Okay, that's the forecast. So the previous was this, that 3 people were for a rate hike, 6 people were against for the unchanged. Now the expectation is that there will be 2 people for a hike and 7 people for unchanged basically. So that's going to be, this is what you need to keep an eye on. 5.25, that's already like given. That's it. Period. Nothing, we don't need that. Check out if by any chance there is an opportunity for somebody to, let's say, if there's one BoE MPC vote cut member, if there is one appearing there for a cut, that's going to be interesting. That's where we could see the pound drifting nicely to the downside. Yes, we could see, like in this situation, for example, maybe break out through the lower side of the range. At the moment, I'm aiming for the lower side of the range because we fell below the 1.2690 territory. I talked about this one. We're currently near the 50-day EMA. So if we drift further below it, then yes, my next target is the 1.2615. EURGBP. Again, this one is a roller coaster ride. I mean, look at this. I mean, so far it's still holding above this 0.8523 territory. Okay, that's fine. If we do drop again below it, I'll go lower. But if we do push above this downside line, and basically this is what I'm saying, if the pound starts heavily drifting to the downside, expect this pair to move nicely higher. Euro Aussie, yesterday I've warned you about this, and there we go. We are pushing above the upper side of the falling channel. That's great. That's wonderful. What's next? Next is the idea here is that if we stay above this downside line or the upper side of the falling channel, yes, I'm going to continue targeting the upside. So far, so good. And finally, EURUSD, guys. Yeah, what else to add here? I mean, we're just drifting nicely to the downside. So yeah, nothing else to add. I talked about this and I said that if we do drop and stay below the 200-day EMA, which is on my chart roughly around the 1.0820 right here. Then yes, my next target is the 1.0756. 50. I would actually say 50. 1.0750 territory. That's what I'm going to be aiming for. And also, given the fact that there is a chance for the US dollar to drift higher, then why not for this pair to drift nicely to the downside? So guys, that's it. That's it for this session. I really hope you found it useful. And thank you very much for watching and listening. I really appreciate that. Guys, really appreciate your time, your views, your rocket ships, your comments, especially the comments, guys. Honestly, you cannot imagine how much happiness you brought me by just commenting there and just having. It's always nice to have a dialogue. You know, I know it's a webinar, it's kind of my show, but you're in it, so I really want you to kind of be part of it as well. So just thank you very much for all your comments. Really appreciate that. So I hope you're gonna have a fantastic trading day today. Don't forget, it's the Fed aftermath, and don't forget that there's a bunch of data that's coming out just like 15 minutes after the US market opens up, and then half an hour the market opens up. So not to mention the European, if you're trading pound and euro, then keep your eyes on the European data today as well. And tomorrow I'll say the same thing, because tomorrow we have the NFPs, and we'll talk about that. Join me tomorrow. Yes. Thank you very much. Hitchcock's G, I can see a good one. Thank you. Yes, I'll see you tomorrow, guys, ladies and gentlemen. Thank you, and bye-bye.
If you want to continue to please the trading gods, subscribe to our channel for a blessing.